Hi, guys. So I think we're good to start for our next session. And the videographer was requesting if people can move to the front a bit and occupy some of the seats at the front. Yet. If you can start. Okay, so I think we can get started. So hi, everybody. Welcome to today's session. Our session today is on the role of foreign direct investment in clean energy in frontier markets, the lessons that have been learned by our panelists up here, and the need for action. My name is Lynn Wesonga. I'm a board member for the Alliance for Rural Electrification, which is an association that seeks to promote decentralized renewable energy, and our host for the Energy Access Investment Forum today. I'm also an associate director with the Cross-Boundary Access Team, which is structured as a distributed electric utility that seeks to deploy capital into mini-grids and other energy access solutions across Africa. And so far, we've committed up to around $80 million in capital in Nigeria only, and looking at other markets as well. And so then I will move to our panelists, who will introduce themselves and tell you a bit about the organizations they represent here today.
Thank you, Lynn. Good afternoon, everyone. I'm Arno Hennen of Gomir Power Networks. We are a microgrid and mini-grid developer, project implementer, and operator, partnering with local partners right now in Nigeria, Democratic Republic of Congo, and Mozambique for productive use and high-impact focused projects. And we've also had the opportunity to bring in foreign investment on all our projects. Here in Nigeria under the PPG support mechanism, in Congo and Mozambique under the UK Energy Catalyst, and also with EEP Africa.
Good afternoon, everyone. My name is Landry Arançon. I'm an investment director for IFU. IFU is the investment fund for developing countries, and it is the Danish DFI. So what we do, we're a DFI, but a bit of a special one because we have sort of two hats. One, which is our DFI balance sheet, so normal DFI activity, and in an initiative to sort of channel commercial money to impact project, we have also a fund that we've raised from commercial investors, mainly pension funds, that we manage and deploy. We operate in most of the emerging markets with a target of 50% of our investments in Africa, target that we have constantly achieved over the past 3-4 years. So that is positive. And in terms of instruments, mainly an equity investor. I think as we're speaking, 85% of our investments are in equity, 15% in debt. But the objective is to ramp up the debt activity, do a bit more and a bit more in the sectors that are impactful. Thank you. Happy to be here.
We will see. That works. Hi, Emilia von Mettenheim. I'm representing the German ECA, actually, in West and Sub-Sahara Africa. We are based in Abidjan since 6 months, so the Germans are trying to get to be here and to get here. And with an ECA cover, I don't know, the export credit agencies, you can actually fill the gap with commercial capital. And I heard today on all the panels that this is quite needed in this sector.
All right, thank you. And I think, Emilia, you'll hold on to your mic because I want to start with you. Export credit agencies, I think a lot of us think of them in connection to utility scale IPP type projects, but you're here in an energy access convention, and so then would be keen to understand how export credit agencies have since modified or their perception of the role they can play within the energy access sector specifically.
So as once on a geographical level, for some, the African continent is still a new market. And the export credit agencies, now I'm not speaking for Germany, I'm speaking in general for all the agencies, they are a big help to motivate exporters to try out new markets. So this is one role, definitely, to make someone comfortable to try out a new area, a new country, new importers. And on the other hand, and now I'm coming a little bit back to my German perspective, there is climate strategies, of course. In Germany, we have a green government that is well known. And for this, we have a climate strategy, especially for the export credit guarantees, which means that conditions for a German export in that sector are very, very comfortable by now. I can later on be more technical about it, but now it's really this is, you can see how politically we are trying to make exporters very, very comfortable, which in the end has a consequence for the pricing in general and, of course, of the cost, the contract values of the products in general.
Okay. I think maybe Anode, in the context of a developer within the continent, how do you maybe see the role of the export credit agency and their interest within sort of the sector, how that can help scale some of the scale that we're looking to achieve?
So all the projects require finance, and finance is definitely a challenge to come by, especially in frontier markets. So access to capital is definitely one of our biggest barriers. And to date, on all our projects, we have actually not really gone into depth or explored many of the options with export credits. So I think it is an interesting opportunity to help reduce some of the risks. I think the reality is also that probably the perceived risks in these frontier markets from the outside is greater than the actual market risk. And the reality is that the potential for impact is just tremendous. That's why we're there. I think that's also why there's an interest from the financier side. So I think we have not followed it to date, but we definitely need all the tools. And so very kind of interested in seeing how it can support our project financing and implementation.
Okay, so that's interesting. Landry, maybe just to you, do you see, and I know you already have, as IFU and as most of the DFIs here, you already have some innovative financial instruments within the market, but how do you see, let's say, collaboration between the DFIs and the ECAs and, of course, tailored to suit sort of the needs of the market right now or the developers on the ground?
No, definitely, and I think it was either you or Emilia who has mentioned that in the utility scale space, this is something that is well owned. I mean, cooperation between ECAs and DFIs. And I guess when going on other levels of the value chain, mini grids, CNI, for example, a bit less, but definitely something that we need to dig into and understand how to work better together. So together, the developers, the ECA agencies, and the DFIs, because I mean, I've followed a few sessions since this morning, and I think we all agree that capital, I mean, access to capital is the main barrier. We all agree that we need to be innovative, so create new ways to work together and we also all agree that capital is available, right? So we need to create new ways to channel these available funds to the project that need them and unlock the impact. So definitely, I mean, keen to have the conversation and see how best we can not only replicate what we have done in the utility space, but improve it based on the lessons learned on that side and make it better on the mini grid side.
Okay, and maybe just still on Landry, you mentioned in your introduction that about 50% of, I think it was the commercial specific portfolio, has been focused on Africa and has been consistently deployed within this continent. In my previous panel, there was discussion around financiers are not seeing a lot of scale, are not able to see projects beyond, let's say, 5 to 7 million. How then, or what are the instruments you guys have put in place to facilitate that consistent 50% deployment within the continent? Because clearly there must be something different being done.
No, definitely, and I mean, I share the same feeling, right? Where our minimum, and that's the truth, our minimum ticket size, for example, is 10 million, right? There are considerations around that, transaction costs, and so on and so forth. So what we have done these past days, I mean, traditionally, we have invested a lot in the utility scale project. So by nature, they're large, and they attract larger ticket size. I think we all agree that, I mean, it used to be the bread and butter, and then now everybody is moving towards CNI, mini grid. So what we are doing now is to look at the platform play, right? If we cannot look at the project on an individual basis just because of the size, if there was a way to sort of aggregate them, then it will make more sense to sort of, I mean, we are an equity investor going more into depth. So investing equity in a platform, that platform has a portfolio, I mean, a pipeline of projects. And as much as they sort of onboard new pipeline project, then the needs are in there. We disperse on our commitment and we deliver on the project. To give you a few concrete examples, I mean, or one actually, we have invested in a platform called JCM Power, but that's still on the utility scale, but renewable, where we were able to do, for example, the 20 megawatt solar plant with battery storage in Malawi. I think if it was on a standalone basis, this is a project that we could not have considered. But because it was part of the pipeline of platform, then it was made possible. So I guess same line of thinking. What we've done in the past, improve it and do better in the mini grid space, could be something, how to sort of aggregate some mini grid project, for example, in a platform. I mean, we are here to discuss and reflect, but definitely that could be a way to improve the amount of money or capital actually flowing to mini grid projects.
Okay, so maybe a note to you, and it's a follow-up to what Landry just said. So hearing the sentiment that there's an interest in looking at this from a platform basis, but I think there's been a lot of conversation on the fact that For example, DRC, $1 million, which is nowhere close to the 10 million that you would typically deploy as a platform, goes a long way, has a higher impact. How then are you able to marry the two? Because you're looking for $1 million just to have the level of scale and impact you're talking about, but then the capital accessible is asking for at least you should need 10 million.
So I'll reiterate the fact that I think $1 million into DRC, into even Nigeria and Mozambique will have more impact than the investments we make in mature markets, both from a development side, also from a climate side. So it's critical that these investments get made, and I think we're all here agreeing to that. There's a huge need for investment and for infrastructure in these markets, and so it's not a lack of potential projects, it's not a lack of pipeline, but probably the market overall is still fairly young. Developers are resource constrained as well, so it takes a lot of resource to engage with the financiers from the developer side as well. We're tremendously taking time to see all the financing opportunities, talk to the financiers, provide material, follow up, DD, all these things. And so it's a huge strain on the developers as well. Developing a pipeline is also a big strain, with also additional risks that if you sign 20 communities, you cannot sign them and then put them on ice for 5 years. The communities are going to go sour on you. They're not going to be willing to accept you if you are ready at that point either. So there's a kind of balancing act for the developer side as well. So yes, I think the pipelines are there, the portfolios are there, and actually once you have an operating site, we find a lot of neighboring communities come to us. They say, oh, actually, and they're asking us to go install assets there, bring power there, and connect their communities as well. So you also get this snowball effect once you have good projects up and running. So I think there's a bit of a balancing act. I would also kind of push the investors to take a bit more risk. Perhaps 10 million is a lot of money for most markets and most developers given the stage of the market. Venture capital, the way they work is they'll do smaller tickets. The ones that survive, they put more money in after. So you get to your 10 million by putting more money into the companies that execute and grow and survive. And instead of spending $200,000 on due diligence and legal fees, spend $200,000 on a developer, take a risk on the developer. And you'll probably end up deploying more capital and perhaps better returns, kind of feeding the winners through that model.
Landry, it looks like you want to respond to that, and then I want to redirect to Emily afterwards.
No, definitely. No, definitely. I think you have. No, definitely. I think Arnaud, you have a good point, right? I mean, and to the example of the VC fund, right? Where I think it's a totally different business model. So it requires a 180-degree shift. But I think instead of me, for example, going back home tomorrow and ask my IC to move from a PIC to a VC IC, which is a totally different ballgame, I think another way to get to the same result could be what we have seen in the utility scale space, right? Where, let's say, for example, you have some developers, all they do is development, right? So they're not after the CAPEX for deployment. So they have this SPV sitting in there. They get funds to develop. That's their activity. And in there, you can have the players that know the rules of that game, right? Throwing a few millions, there's a pipeline of 10, maybe 1 or 2 or maybe 3 will peak. Once this one has peaked, then send it to an asset co where a DFI will do what they know, doing the best, which is financing the CAPEX. And because you'll have a platform, then I think we can get to the same results a different way without sort of shifting and me asking my IC to become a VC IC.
Yeah, maybe just to Emilia, and I'll come back to Landry's point, but the initial point made by Anod, which is we start out with 1 million, but that 1 million in DRC actually has a lot of impact, and we scale to 10. What would that mean from an innovativeness with respect to the ECA and what you've typically done? Because then it's usually coming from a place of I have close to even 50 million, but now you're saying I want you to start with 1, then we grow with that.
It's let me explain a little bit the classical export credit guarantee, which doesn't involve a bank actually. It's a supplier credit. It's the exporter gives the importer some time to pay, makes a nice payment plan. We can go up to, in the green projects, up to 22 years now, which is new actually, but if not 8, 12 years, we heard these numbers today already. And that repayment time will be guaranteed by the German government for the exporter, so he has the risks out of his books. First thing. Now let me give a little beautiful example actually from Nigeria, because the problem that I'm communicating with banks all the time, and I'm also, I have to say, I'm tired that they tell me from 10 million on you can call us. Okay, what do I do in all these beautiful projects that are beneath that? Little example from Nigeria, if I may. There was an exporter, and it's all very new, and it's not done yet. And they found lots of partners in. They have off-grid solutions for agricultural business here. So every water pump, they can install and make people very independent from the big electric system. So. Of course, this exporter is pretty new on the market, and they say already 1 million, already 300,000 euros, this is too much for us, even in a supplier credit form that I just explained. And so since a year, we have a new instrument. Along lots of products, we have the forfeiting guarantee. So for them, we propose them to do this deal and to sign it, 300,000 in this case. For this, she has 7 years for the repayment plan, for example. And now in Germany, she can sell the obligation of the importer in Nigeria to her house bank. And her liquidity is immediately assured. And also this forfeiting contract is guaranteed by the German government, even though the risk is in Germany. So this is this is how we try to come to that. But I also want to say that I think on the panel before there was the sentence "think out of the box." And this topic with to guarantee or to give loans that may be called small in Europe, I said it this morning already, are very smart here on the market. And if you want to understand and go with the market, I think you should take in account the follow-up potential when you calculate your possibilities. Because clients are not coming back later on once you let them down. This is what I learned from my exporters, other sectors, but they were very clear on that. So better calculate your follow-up potential and make the work once, and maybe create a routine. And routine is something, is for me, a key word in this to motivate.
Yeah. Okay. There's a lot to still discuss there, but I'm looking at the time, and I did want to leave some 5 minutes to the audience and just see if there's any particular point that anyone wanted to discuss, or rather to ask a question on. Okay.
Thank you, Lynn. Thank you all. My name is Edwin Chui. and I work for Arch Emerging Markets. We are a private commercial investor, and we have actually invested in cross-boundary access and other platforms. So I'm very, very happy to hear the message that's coming across. It's a message we've been trying to push across as well. And I think my question, I don't mean to make you speak for other DFIs, but I think one way to help developers build platforms is to perhaps improve the speed at which development finance institutions close transactions. I can see some CEOs sitting in the crowd who would be happy to really move quickly and aggregate these portfolios, but they spend a lot of time even closing bridge financing rounds. So I guess my question is, what do you think about that? And what are we doing to address that as DFIs? And again, I know you're not speaking for all DFIs.
No, definitely. I think it's a fair point, right? The speed of the DFIs. I think there was a panel this morning discussing about how the organization is structured, right? I'm sitting here, I work for IFU, and I think we still take pride in the sense that we one of the smallest DFIs, European DFI, which gives us a bit of flexibility, right? So even being long, we can be amongst the fastest now. The more we grow, the more we add complexity to the thing, right, to the organization. But no, I do agree with you, and I think Emilia has used the word routine, right? I guess today, if I get a utility scale project, I'm pretty sure I'm gonna close it faster than a mini-grid project. Why? Because I have done a few, right? My IC is educated to utility scale. So I think it is a journey that we all have to take together. It's a bit of education for the youngest DFIs, for example, or the ones that are now going into the mini-grid space. The more we do, the more we get used to it, and the faster we're going to do the next one. And I think it will go in the positive way. I'm optimistic.
All right, we are actually out of time, and I just wanted to leave a few minutes for our panelists to just quickly give a brief takeaway. Like, what do you want the audience to take away from this discussion? Just like a quick 3 seconds.
Wow, lots of points, but first, I think all the developers are working to make the sector work. We believe in the sector. I think we believe that the projects will be economic and the sector is going to have the impact that we're targeting. I think it's also, I took away that it's great to see that financiers are putting money in, are trying to find solutions to make the sector work. And we're definitely here to help you deploy that capital.
Definitely. No. On my side, I think what we are looking for is to deploy capital and unlock impacts. That's our raison d'être. On the other side of the table, we have the developers, especially in the mini-grid phase, and I think there's no question about the impact that is in the mini-grid space. So let's be innovative. Let's work together. We have mentioned repeat deals. We've mentioned platform. We've mentioned, for example, the DevCo asset co setup to help speed the deployment of CAPEX in this. Let's keep the reflection going, being innovative, works hand in hand, and I'm sure we'll get there at some point.
I'll keep it very short. Whenever you are already negotiating, even if you're thinking about a project, just call. Call me and let's see what we can do, and let's be quick.
All right. Thanks, everybody. That's the end of our session. I hope it was insightful. Again, I will offer their time. In case you have any follow-up questions, just feel free to ask. But thank you so much for attending this.